Hello, everyone, and welcome to another edition of the Forex Technical Market Update for July 30th, 2015. Okay, in front of us we have a daily chart of the US dollar index, and the US dollar index is a very good gauge to see exactly where all the dollar pairs are, what they are doing. Because it's a composite of the different dollar pairs, for those of you who did not know. And we see that we are in a consolidation pattern with the US dollar index, and the market is now approaching that downtrend line drawn off of the high in March, April, and July. This is the market hit this trend line one, two, three times, and now this is the fourth time it wants to approach this market. And we could see the market decline from here, or we could see the market break to the upside and challenge this old high near the $100 level. So we're going to keep an eye out on this situation. Remember, we are in the summer months, and the summer months tend to be fairly choppy and can be slow. But one thing I have learned with these markets is that they can surprise, and the market can break either way, up or down, to the up or down side, and the price action can move fairly violently and quickly. So you always have to be on the lookout for these market moves. Okay, so taking a look at the euro almost identical situation with the US dollar index, but in the reverse, because the euro, when the euro goes down, that means the US dollar is strengthening, and the chart almost looks like a mirror image of the US dollar index. And this market is approaching, so we have the trend line 1, 2, 3, and this is the fourth time the market is now approaching this trend line. And we are going to see if the market will break to the downside and challenge this 104 region in the euro. The British pound is holding up fairly well, although the US dollar is up across the board. The British pound remains up slightly this morning, well, as of this taping, and we're at 156.15, and the market is just looking to challenge this high that was made again. As you can see, this channel here, one time, two times, three times. Yesterday the market challenged again 4 times, but the market did not just decline rapidly. The market has come back up and could challenge this area again, and we'll see if the market has the momentum to break out to the upside and continue maybe up to the 159 level. So the technical analysis of the British pound looks fairly favorable. On the downside, if the market does decline and closes below this 154.50 level, that would be very bearish for this market, and we could see the market test this trend line. If the market moves to the downside, let me go back to the 4-hour chart, we could see the market test this trend line, this upsloping trend line. So that's what we're looking for the downside of the British pound. Naturally, with the pound up, we have the British pound, Japanese yen up again on the day, and we see that the market is challenging this 194 level. And our members are long this market, and we are seeing a slight profit in this market. But I'm looking to see if we can challenge this 196 level, in the British pound versus the Japanese yen. Looking at the Japanese yen, we were up on the day, up more than we are today now, and we have seen some weakness in the stock market, and that seems to be affecting the Japanese yen, and we are getting some resistance in this 124.50 region. Taking a look at the 4-hour chart, we see, let me draw a red line at 124.50, and we're getting some resistance in this 124.50 level. And that's why it's always important to plot your support and resistance lines, because because what you will see is that the market do react off of, or more often than not react off of these support and resistance lines. And that's why if you are trading and you're consistently trading, it's important that you do your market analysis, because when you do your market analysis, you become greater prepared to battle the forex market, or to battle any market for that matter. Because remember, there are hundreds of other traders that are trading millions of dollars or billions of dollars really, and everyone is in the market. They are out to make money. Everyone is in the market to make money. They are not in the market for playing around. They are in the market to make money. So if you are going to be consistently trading this market, you might as well take it very seriously and do your analysis. And if you are not going to take it really seriously and not prepare before you trade, it might as well you don't trade, because you are more than likely will be giving away your money to other market participants. This market is a market that can be traded profitably. It just takes some work in order to do it. Okay, taking a look at the Canadian dollar. Yesterday we did say that the market, just for some history, for those of you who didn't see yesterday's analysis, we did say the market is coming up on a resistance, this 130 level. This is a monthly chart of the Canadian dollar. The market is up against this 130 level. This prior resistance was made in 2008 and 2009. And we see that the market traded up to the resistance level. Let me just increase the size. The market traded up to this resistance level, came down, and is coming back up again. So we're just waiting to see if the market can close above this 131 level, which would be fairly bullish for the US dollar versus Canadian dollar. But keep in mind that this level has been tested a number of times already. But look at these wicks and these candles. 1, 2, 3, 4. And this is the 5th time this level is being tested. So this 130 level is very significant, and a very significant chart point in the USD Canadian dollar. Taking a look at the gold market, the market continues to trade sideways, and we have a minor long-term trend line drawn off of these bottoms that were made in 2006 and 2008, and the market has breached that trend line. So what we could see is that the market could come back and retest this trend line. But this market, despite the breakdown that we had, still remains below the breakdown point. And although there is some stability in the market, we could see further losses in this market anytime now. Or what we could see also is a recovery to this breakdown point, and the market could attempt to decline from here. So I'm very negative gold. I have been negative gold ever since 2012, and I remain negative gold and will remain on the short side of the gold market. Okay, if you'd like to have your trading signals sent to your account automatically, remember you can click on the link below this video, and I hope you have a wonderful day. Thank you very much for listening.